that, I would like to welcome you back again to Digital Davos. We are in our summer 2024
David, we have to
series.
log out.
Yeah,
Sorry.
please. Yeah. And again, welcome to Digital Davos 2024 summer series. It is my absolute pleasure to now take this discussion from a global scenario where we just spoke about sickle cell disorder and Africa, India, and the Middle East. Now moving on to crypto strategies in a volatile world, and and then I would like to bring this more to a local environment, and specifically looking at the Silicon Valley side of it. As you know, we have seen some volatility in banking and in traditional banking, and we have had a couple of very key institutions go under recently. So with that, is there a need for a new bank in Silicon Valley? And this is what we will explore. It is my absolute pleasure to introduce Dr. Sanjeev Khagram. Now, this is a gentleman who, if most people in academia know, most people in business worlds know, most people at the World Economic Forum know, but without that, I will give a brief introduction, and this doesn't cover even 10% of what Sanjeev does. But this is an innovative entrepreneur, a master academic, and a absolutely visionary person and a thought leader beyond compare. Um, what we have seen from him is success across private, public, social, and academic sectors. Most recently, he was the CEO, Director General, and Dean of Thunderbird School of Global Management, where he led arguably the most dramatic turnaround in higher education history over the last 6 years. And then, to kind of add to that is that it was in a absolute scenario where perhaps there was even talks of Thunderbird going under, and being completely absorbed into Arizona State. So Dr. Khagram is currently the co-founder, board director, and investor for a new startup bank in Silicon Valley, and the president of the Global Carbon Removal Partnership, along with other transformative endeavors in ESG impact. But this is more about banking. So with that, I will turn it over to Dr. Sanjeev, and then we'll take it from here.
Thank you so much, Anand Bhai. Good morning, good afternoon, good evening, everyone. It's so great to be part of Digital Davos. Anand, thank you for your leadership, the team's leadership. It's been so amazing to have this opportunity, this platform of Digital Davos, to make Davos more inclusive, to be advancing thought leadership around the world. I've enjoyed being a participant and learning from it, and we have this great opportunity to share with you exactly what the title says, what we believe, myself and my co-panelists, co-founders here at our new bank that we're launching in Silicon Valley, why Silicon Valley absolutely needs not only a new bank, but a 21st century high-touch, high-tech bank to advance entrepreneurship, innovation, and sustainable and equitable prosperity, not only in Silicon Valley and Northern California, but across the state, across the country, and around the world. Just a little bit background about why this is meaningful to me personally. Some of you may know that I was born in Uganda, fourth generation. My family was the 20th wealthiest family in the country. We were expelled by Idi Amin, became refugees, went to refugee camps for a number of years. Before we were expelled, we actually co-owned the largest bank in Jinja, Uganda. So this is a very personal endeavor for me. And it's about bringing inclusion and prosperity for all of us, my co-panelists, co-founders, and our entire board, and those involved in setting up this bank. I went out to Stanford as an undergraduate in the mid-1980s. Now I'm dating myself, although you could tell from my graying and white hair here. And at that point, and if you look at the banks in Silicon Valley, and particularly Santa Clara, there were 17 banks with headquarters in Santa Clara in 1995. When I was still at Stanford, I had gone off and done a startup and then went back to get my PhD. And now, today, there are only 3 banks in Santa Clara that are headquartered in Santa Clara. Over the same time, the number of deposits or the value of deposits in Santa Clara have gone up tenfold. The last new bank in Santa Clara was formed in 2008. And the last new bank in adjacent San Mateo County was founded and established in 2003. Now, you all know Santa Clara, San Mateo are the heart of Silicon Valley. And in Santa Clara County, of course, we have the headquarters of 7 of the 10 largest tech companies in the world, Apple, NVIDIA, Google, Meta, Broadcom, Oracle, Netflix, but of course, dozens, hundreds, thousands of other startups, entrepreneurs, initiatives, big companies that have come out of Silicon Valley, of course, in the tech world, but much more broad than that, right? Much more broad than that. And so we really have hundreds and thousands of small and medium-sized enterprises across every sector. So this is what's very exciting for us, because just 2 more facts before I introduce our incredible panel and my wonderful brothers and sisters who are involved in this, is that if you think about where we were in the 1980s and 90s, Silicon Valley Bank, which Tom Vertin, who I'm going to introduce in a second, was for 16 years there, really, started in 1983, 84. And if you had invested $1,000 in the early 90s, right, Tom, in Silicon Valley Bank, by 2022, before the collapse or before the, challenges, you would have been a millionaire, from 1,000 to a millionaire. And it was an incredibly transformative time. The other thing that means a lot to all of us, but certainly to our other board members who I'll introduce also, Victoria Vizo and Mark Trebet and all of us, is that in the United States, there are only 150 minority designated banks. And only 2 of those 150 are multiracial minority designated banks. So for us, Mark, Vicky, Tom, Steve Chang, my Stanford roommate and the chair of our board and principal founder of the bank, neurosurgeon at Stanford Hospital, our commitment is to be that third multiracial minority designated bank. So this is a bank that has a deep set of values, but is also, and it's about the longer term, about creating a legacy for our children and grandchildren, really being transformative in every way, but at a very, very opportune time that we're setting it up. We began the idea of what now has become Altos Bank. Our first branch will be in Los Altos 3-4 years ago. It germinated. It's a very complex process, and we can get into that with Tom and all of you, with banking regulators and so forth, and we're still in that process. But then, of course, as Anand alluded to, and we'll get to this, Silicon Valley Bank, First Republic Bank, and so what was a once-in-a-generation opportunity to launch a new high-touch, high-tech 21st century bank for Silicon Valley, but for California, the country, and the world, has now become a once-in-a-100-year opportunity. So we have 3 great panelists that are going to get involved right now, and then we'll open it up, 10, 15 minutes if we can. If not, we'll just keep going for the next 35 to 40 minutes. We have Tom Vertin, who has 40 years in banking, started Bank of America through a series of community banks, obviously at Silicon Valley Bank. I don't want to say too much because I want him to share a little about his personal professional story, because he really has seen the transformation in banking across California and particularly Silicon Valley. And we are lucky enough to have him as our founding CEO, board member, and co-founder. We have Victoria Vizo, who is a president of a major insurance company in Silicon Valley in the Bay Area, longtime family based in the Bay Area, and so is deeply connected to the community, not only our for-profits and startups and entrepreneurship side, but also our nonprofits, our community organizations, and so forth. And then we have Mark Trebet, who comes from the banking sector, then got his PhD. He's now a professor at Pepperdine in strategic management and global strategy. And he's an incredible important part of our overall team and a real visionary and kind of the heart and soul of our value base for the bank. With that, I want to start off with the first round of questions. And in that, I'm hoping each of you will share a little bit about your own story, like I did, about why this means so much to you personally at this point in our lives. I will say for all of us, we're in a certain point of our lives where it is about certainly doing well in the world, but it's about impact and legacy. And that's what's drawn all of us co-founders together. So Tom, give everyone here and around the world in various different time zones and cultures. A little bit about your personal story, how you grew up in banking in Silicon Valley, and then why, Alos Bank, this new bank, is so exciting and inspiring for you, why you are so committed, and we're so grateful for all your leadership and hard work. Tom?
Great. Thank you, Sanjeev. Let me start by saying that I became a banker through the hazards of networking. At the time I joined Bank of America, I was working in Geneva, Switzerland, for the World Health Organization, and I was looking at coming back to California to get a master's degree. And I happened to meet the person that ran Bank of America California. Before that, they ran Bank of America World Division. So through the hazards of networking, I got to meet with this gentleman, and he offered me a job with Bank of America to learn community banking. I spent 3 years learning everything I could at Bank of America in downtown San Jose. I am native to San Jose. In fact, one of my high school memories is meeting Vicky's aunt at a high school dance. So we both have some history in San Jose. But in any event, I was convinced then, and I'm even more convinced today, that banking is a relationship business. And though Bank of America taught me a lot and launched my career, I recognized that I had jumped from the largest bureaucracy in the world to the second largest bureaucracy in the world, being Bank of America. So after 3 years, I decided to try community banking, smaller banks. I worked for two. At those two banks, I learned about sales, and especially about differentiation and how that leads to client acquisition. And frankly, I became pretty good at figuring out how to differentiate myself and my bank from all the other community banks that Sanjeev had alluded to that existed back in the late 80s in downtown San Jose. So I went to two different community banks. In the second one, I started a technology division to compete with the then very young Silicon Valley Bank. I allowed myself to be recruited to Silicon Valley Bank in 1993. It was $1 billion at that time. I left Silicon Valley Bank 18 years later. It was then a $30 billion bank and considerably different. At the bank, my first job there was to run a small team. And then each succeeding job was running larger and larger teams, and also involved in turnarounds of divisions or groups or teams in Silicon Valley Bank that were underperforming. So I had an opportunity to really exercise some skills in figuring out what was wrong with the performance, changing it, having it improve, and then moving on to larger and larger responsibilities within the bank, culminating in the chief operating officer of the bank, not the holding company, but the bank. I was never an operations guy, but my portfolio was so broad, they really didn't know what else, what other title to give me than chief operating officer. I think the job that I enjoyed most, however, at Silicon Valley Bank was head of the Western Division, where I managed the Irby vertical, hardware, software, life science, the internet, and Irby office in California for Silicon Valley Bank. At that time, it represented about 50% of the revenue. So I really got to know Southern California for the first time through offices in LA, San Diego, Orange County, and elsewhere.
I'm just being mindful of time. I don't mean to interrupt, but could you jump to now kind of coming to why we want Alos Bank and why you're keen on that, why you're so excited and inspired about Alos?
Yes, I would be delighted to do that. Thank you for pushing me along. There was, when Alos Bank was first conceived, there was a substantial need for another bank. And the reason for that need is that smaller businesses were being ignored. So when a bank gets to medium size or large size, they find small business, the requirements a small business need for customization and for loans is really not a profitable enterprise. In fact, at the banks that we're seeing now, one of them is a $2 billion bank, really do not want to engage with a small business if they need less than $3 million. It's just not profitable. It doesn't move the needle for them. So there is present an underserved part of the banking community, smaller businesses, and that's small businesses measured as a number of employees. That's 100 or less. There's 280,000 of those small businesses in Santa Clara and San Mateo County that I believe that we could serve. And I've talked to a good number of them, and they're ready to move. But what I would really like to address is why this is a 100-year opportunity as opposed to a generational opportunity. And that is because with the tragic demise of Silicon Valley Bank and First Republic, we have hundreds of employees that now work for other banks through no choice of their own. And with them, they have their portfolios of thousands of companies that are with other banks that they never chose to be with. So we have displaced, and according to the Wall Street Journal and Bloomberg, displeased clients that are waiting to see where their relationship manager goes in order to decide what bank they're going to go to. These are relationship managers that they've had for 6, 7, 10, 12. I talked to one client that had his relationship manager for 21 years. So when I asked the question, why are you still with Chase and so dissatisfied? The answer is, well, I'm waiting to see where my relationship manager goes. I think this is a great opportunity for us because of all of these clients looking for an alternative to the multinational banks around now. And they recognize that when you invest, when you put your money, your deposits in a multinational bank, the money can end up in Indiana, Indonesia, India, it can end up anywhere but home. It's not being reinvested in the community. And that is really the important purpose of a community bank, is to reinvest the excess in this form, excess deposits, reinvest that into the community. And that's what I'm really excited about, that the fact that we could be recycling the excess funds in the community into the businesses that need it here. And Sanjeev, that's one of my major driving forces.
Well, like I said, and I hope our audience get a sense, we couldn't be more lucky than to have Tom, his incredible history across many different types of institutions, but also the understanding of the market that we're in, the needs of it, but a core sense of values. And that's where I want to go to Vicky. Vicky, you've been in Silicon Valley, the community, for a long time. Why, tell us a little bit more about yourself, of course, but also why is being involved, investing, being a co-founder, bringing everybody to Alos Bank, which will soon launch, we believe, in the end of September, early October. Why is this so meaningful to you at this point in your life?
Well, thank you, Sanjeev, and thank you for everyone that's out there listening and taking the time to hear our story. I'm 46. I grew up, born and raised, third generation in Silicon Valley, San Jose. I was raised here when it was called San Jose, not Silicon Valley. And it was a different world. It's there, and I would say that it changed substantially. I would say right around year 2000. I remember coming back from college and walking in and being like, wait a minute, where are the cherry orchards that I grew up on? Where, you know, they're all now hospitals and semiconductor businesses. And I decided, my family was in a family business, and I grew up in a family business, construction, plumbing, contracting, and everything that I grew up around was about family, and it was about people, and it was about community. And I remember so clearly, it was Santa Clara Bank at the time, would be coming in and helping my parents build and grow their business. And my family came over from Portugal, primarily, and my grandfather, Italy. But they would be in our house. They would be at the business. They would be active. I knew who they were. They would create accounts for us. Like, we would walk in there and play banker. And it was part of our childhood. It was part of our community. It was a part of who we were. And the bankers in Santa Clara Bank, and they helped build and grow our family's business to a very successful business. And as I grew up here and I got into the insurance business, and I found myself in two buckets. One bucket, I was with family-owned businesses, small businesses. I find myself in jeans and boots and a hat, going up and down some of the agricultural families, some of the oil families, the real estate families. And then the other half, I was very fortunate, and I met some of the most innovative minds in the tech world. And I was blessed and fortunate to be brought in-house for some of the most successful international multifamily offices in the world. And I sat at the table, and I watched and I listened and I observed for the last 22 years what these families were doing and what these founders were doing, and saw all these, social media companies grow and boom, and what their foundations were doing. And my personal take is that we could call diversity in so many different ways. We're diverse because I'm a white Caucasian female. Someone else may be Indian or African American or Asian or this or that. But there's also a diversity in how we're raised. There's also a diversity in how we are, in our experiences and our knowledge. There's a diversity in the tech world versus the family business world. And there's been such a divide in our world, as we know. There's been such a divide in our country, as you know. And there are divides here at home. And I have found from my experience that the tech is so innovative, and we want a part of that. We want to be part of the tech world. We want to have the innovation. We want to have an amazing technology in our bank. We want people to be able to do their banking on their phone. We want it to be able to be quick and easy and innovative. And we also want to have, I also found that these smaller businesses have felt left behind because they didn't have access, left behind because they weren't part of the great growth, left behind because maybe they're stuck in some of their older ways and they're not used to having that type of technology. And I really believe wholeheartedly, and what I'm so excited about is being a bridge, and the bridge from the tech to the small businesses. And the beauty that I find that I love being involved in is that all of us on our team, the organizers, the board, the founders, none of us set out to be diversified. It wasn't that we're like, oh, we're going to pick this person because of this or this person because of this. We actually came together because we were like-minded, that we have aligned values, that we have this amazing trust that we all have together within each other and for ourselves. We have this amazing experience, broad, diversified experience, from relationships to what we've been involved in. We want to help each other grow. We want to leave that legacy for each other and for all. And what an incredible, and to me, it gives me the chills that we can be the third multiracial bank in the country or in the world. I mean, that's amazing. And it's not because it's a hot topic. It's because that's who we are. And to be able to create something because of that is who we are, and make a history, and be able to build a community that isn't, quote, a group of this or a group of that, but that we're one, I think is pretty darn awesome. So that's what moves me. That's what excites me. And, ironically, one of our board members was also one of the guys John Russell, that helped my family. And my dad to this day just kind of laughs and he's like, Vicky, I don't know how you did it, but you found the right people. And so if I hear that from my dad, because I am a daddy's girl, I always will be. I know I'm doing something right. So I'm really excited, beyond excited.
Thank you so much, Vicky. I hope our audience is gathering not only the tremendous opportunity, the exponential opportunity, right? Tom, Vicky, Mark, but also the deep purpose behind the institution we're creating, not only for this bank, but as a model for institutions in our country, as Vicky was saying, in our world that desperately needs it. And with that, really, I think of our kind of chief purpose officer and leader here, Mark Trebet, want to bring him on. He's been a heart of soul of our team that is incredible, as Vicky was sharing. Mark, why did you come from banking, you're a leading academic, you're an entrepreneur, why the bank at this time? And, maybe advance a little bit more also, what we're trying to build for the long term here with Alos Bank. Mark?
Sure. I'm really happy to be here today and get an opportunity to talk about Alos. It's definitely something that is super exciting to me. As Sanjeev mentioned, my career started in banking, which is really interesting. You kind of come full circle, right? My first job was at a community bank, and I got an opportunity to go out with lenders out into the world and kind of shake hands with these small businesses and understand them. And as a young person, you say, I want the world. So you leave that and you go on to bigger, you think, and better things. And so it's kind of interesting that the first job I had was probably the best thing that I've done in my career, right? So what I find exciting and interesting about this is that as a person of color in the United States, and working in the banking industry, I was always one of the few of color in the room, and I always thought that interesting and didn't understand, why that it had to be that way. And so from that, though, I learned a lot, and I learned that people look at the world through their own experiences, and when you have the same people in the room with very similar backgrounds, they tend to look at the world the same way, and they go down a very specific path. What I find really interesting about this opportunity is this diverse group of people that we have with all these different experiences coming into the room, and recognizing not only our different perspectives, but also focusing in on this idea of small business. So as Tom mentioned, there are thousands of small businesses in the the Silicon Valley area, but there's hundreds of thousands throughout the country and millions in the world, and the world is run by small business, right? As a professor at Pepperdine, I actually work with a number of people that are either own their own business that is classified as a small business or work for one, the vast majority of my students. And the very same problems come up, right? My bank doesn't understand me. It doesn't understand my needs. I feel like I'm a secondhand citizen to my bank. And I think that we are engaging in something that will give people what they want, small businesses what they want and what they need. And I see, as a strategist, I see the long view being that we can operate in this space for years to come, for decades to come, and grow and expand this idea, this methodology, this approach to small businesses, not only in the Silicon Valley area, but throughout the state of California and even beyond. And so I keep that at the forefront of what I think about whenever we come together as a group. I keep that in the back of my mind. I keep thinking about us moving forward and growing and being this thing, helping these small businesses to get to where they want to go, right? There's, as we know, funding is a barrier, right? And giving access to funding to these small businesses, understanding what their needs are, what their interests are, being intimately aware of the environments that they operate in, are all really important things that I think we at Alos Bank are going to deliver. The other thing that I find really interesting and that I think a lot about is I have had the great pleasure of working with some really smart people around the world. And from that, what I have kind of a three-pronged approach to anything that I'm willing to get involved in. I have to be working with really smart people who are results oriented, that I like. Those three things are the things that I need to have for me to be engaged in an opportunity. And I must say, I feel so great that we hit all three of those in our team. And we have talked about this. I've talked about this with several of our members. We want that to be kind of the through line, the golden thread that holds us together as we grow. We want to be smart, results oriented, good people. And if we can continue to do that, I think just success will just come to us in droves.
Thank
I
you
hope
so
I hit
much,
on.
Mark.
Yep.
You did, man, as did Vicky and Tom. And I'm going to come back to Tom to come back to more about the what and the how in 1 second, Tom. So I'm coming back to you. But let me just tell you all a little story that I will wrap up my own side. So when I was a doctoral student at Stanford, I started a chain of grocery stores, that small family business kind of orientation that Vicky and Mark were talking about. By the time, I was done, we had a chain of convenience stores, grocery stores from San Jose to San Francisco. And I would start my day at Stanford doing my classes, and then I would go to all of them. Well, one of them was in Palo Alto, right next to where First Republic opened its first branch, right next. I luckily enough, I was successful enough, blessed. I now own that property right next to First Republic. But I started that with my mother, who never graduated high school, obviously was a refugee. We were all together. She was as good a business person in the world, but she didn't have much formal skills and so forth. And I will say, even at that heady day when First Republic was first starting, and while many of us were drawn to banks like First Republic and Silicon Valley, they said no to us. And we were right next door to them. That's exactly not what we want to do. We want to be there for every single small business to tech entrepreneur, for nonprofit organizations, and bring the community and serve the community. But do so as you're getting, and this is where I want to go back to Tom, in the most advanced technological way with the highest level of touch and service. And that's really an incredible opportunity for us in terms of what Mark was saying about what it requires in terms of innovation, intelligence, creativity. That's what we have. And the team that we have with Tom, that he's building with our support, and the invitation to all of you is not only to be investors, depositors, so forth, and consumers with our bank, but to be our members, to be part of this family that we're creating around Alos Bank. So with that, Tom, talk a little bit about the nuts and bolts. What are we doing in terms of the bank? We're raising $30 million. We're going to have $300 million plus minus. And walk people through, because a bank startup, people like, what is this thing? A lot of us have done startups of various kinds, like Vicky and all of us, from the sort of very mom and pop to the high tech. But a bank, it's a little bit mysterious. So walk everybody through how we start up a bank.
So let me just say that the only the major dimension that you might not be familiar with when you're engaged in your own startup is the dimension of the regulatory environment. So there's a whole group of regulators you need to deal with, and those regulators have been in a little trouble lately as a result of the tragedy of Silicon Valley Bank and First Republic. In fact, we submitted our license 2 months before the demise of Silicon Valley Bank, 4 months before the demise of First Republic. And that's kind of a double-edged sword. On one hand, the regulators have heightened sensitivity now to every area of weakness. And on the other hand, it makes all kinds of very talented people available to us, and a whole slew of discontented clients available to us. So that's going to make scaling a little bit easier. The other thing that's going to make scaling a little easier for us is that we had the opportunity to vigorously explore core processing that would make us, that put us on the leading edge, not the bleeding edge of banking, but the leading edge of banking. So that, in fact, one of the questions that my director of operations would ask each vendor, he'd pick up his phone and he said, look, if your service cannot be provided on this phone, then you're not the vendor for us. And we went through a lot of vendors that way. So everything that we're going to be able to offer our clients, we're going to be able to offer it on a mobile device. So we really have looked at how to make payments and other aspects of banking as easy as possible. We are also looking at, we have a headquarters building in Los Altos, which puts us in the center of Silicon Valley so that we can have access to the clients from around the Bay Area, because we intend to be high touch, as Vicki mentioned earlier. So we're going to have a unique combination, I think, of the most advanced technology to run a bank, as well as accessibility. We also will have multilingual capabilities within our bank, delivered by individuals that have that mother tongue. Eventually, we'll have that multilingual advantage using artificial intelligence, but they're not quite there yet. So I'm really delighted with the tool set that we've been able to bring together that is really going to allow us to differentiate ourselves from all the other banks, given the technology that we're using, given the people that we're gathering together that are united in purpose, and given the fact of our location makes us so accessible.
Thank you so much, Tom. So I think for those of you like myself and like us who have been entrepreneurs here at home and around the world, you know, it really takes leadership. It takes an incredible strategy, and it takes a deep culture, a culture of purpose. That's what success is, in addition to the incredible 3 factors of why we do what we do that Mark shared about smarts, results, and good people. So the opportunity is tremendous and exponential. As we said, what was once in a generation, now once in 100. The purpose and the community, the family that's assembled around this is unique and truly, truly transformative. We are going to be the 3rd multiracial minority designated bank in the United States. And as Tom was mentioning, the ability then to go from Alos Bank in Silicon Valley to, we believe, Southern California, across the country, and potentially around the world, but always keeping true as we scale, right, Tom, that we don't go the way of the big multinational. We always are first about our people, our communities, our small business, our entrepreneurs. So this is why Silicon Valley, Anand and colleagues, friends, brothers and sisters, needs a new bank, and what we're trying to do, and we hope that you'll join us. We're raising about $30 million. We have more than half of it in. We're really going off with this is an opportunity to join us in this incredible journey. So thank you again, Anand, and everyone, for giving us a little time.
Oh, Sanjeev, I'm not going to let you off the hook so easily. None of you. I just want to kind of, since we shared a little background, you guys shared a little background. I want to say that I started my journey in traditional banks. I worked for 3 of the largest money center banks in the country. My inspiration for joining banking was my older brother, who at the time was a specialty lender in Long Island and did all the large loans for Citibank. So within the business and professional group. And I was amazed at, how this team operated, because they were community lenders. And they would walk into a business at 9 o'clock in the morning, and by 6 p.m. that night, they would have a term sheet sent back to them in saying, here's what we can do for you. Obviously, this is pre the centralization of underwriting. So these guys were actually underwriting loans. So this inspired me, and it really led me to actually stay on in banking, of which I had no interest at the time. My interest at that time was much, much more diverse. What I would say to you is that, I heard a few things that people mentioned and said. Community bankers tend to have long-term relationships, right? But that long-term relationship is based on a trust which comes from training, and being able to educate the small business owner. A bank which such as yours, which is now talking about lending, which has been a no-no word in banking since the 90s. Really, most money center banks have looked at any kind of lending process and said, yeah, no, unless they're giving up their house and then the first kid and maybe the second one too. So it's a really refreshing change to see that you guys are actually committed to creating a multifaceted relationship based approach. We went from a banking environment where cross-sell was important, leading with credit was important to solidify that relationship, to saying we just want checking deposits and we want fee income and we could care less about anything else. And to get a little bit more technical, and this question goes to you, Tom. We understand, from the banking side of it, that there is a net interest margin, and that net interest margin is obviously the difference between your deposits and your loans. But then there's also the net interest income side of it, which is your borrowing, and that could be from the Fed or it could be from other sources. Currently, the Fed rates are what, 5.5. The prime rates are 8.5. That gives you a 3% margin. Is that a margin that you would be able to take and not go down in the ratios that Silicon Valley and First Republic did? And just to kind of add in, I don't want to leave Signature Bank out. They were in the same boat. So let's keep the three of them together.
The trifecta.
That's right, the trifecta. And we've seen that the Fed, is not necessarily really good at managing banks, or actually managing what happens to branches, or managing what happens to small businesses. In Signature's case, they went to Flagstaff, said, "Here you go. Here's your new bank." Flagstaff is now going under, from most indications. And so now, again, a business owner is now not only one step behind, but now two steps behind. And because their checks still say Signature Bank, their branch is actually Flagstone, but they know they're going to a third bank. So it's a really complicated thing. So how do you manage profitability? And that has been the key side for most banks walking away since the pullback of the SBA products, especially the low doc programs and the 504 programs. So talk a little bit, Tom, about how you are going to bridge this gap, which most commercial banks and money center banks have just walked away from.
Okay. That's an excellent question. And if you don't mind, I'll divide it into two parts. First, I would like to go with your observation that underwriting was centralized sometime in the 1990s. And you're absolutely right, it was, which then caused a divorce, if you will, between the small business and the very large bank. And there wasn't a direct engagement between the underwriter and small business. That's not the type of banking that I've been engaged in. So the relationship managers that are actually engaging with the businesses, like Vicky had described of her own family business, they will be underwriters. So they will engage in understanding the business, understanding the business model, understanding the risk and rewards of that business, and underwrite to those. So that our underwriting will be done on a very local level, not by a specialized group, but by the representative of the bank itself. So underwriting will be done by the relationship managers who have had those relationships for 4, 6, 8, 10 years. One more thing about that relationship. Previously, at Silicon Valley Bank, when you got promoted, your portfolio was transferred to the next junior guy. We're not going to do that. If you get promoted, you take your portfolio with you, thereby enforcing that idea that relationship is a relationship business and that relationship will be of long duration. So I think that's really important. I also think it's important for the relationship manager or the person promoted to stay connected to the marketplace. And you do that by maintaining your portfolio. So that's kind of one side of the business. My mentor and a former CEO of Silicon Valley Bank, the CEO before the great demise, wrote an article for the Wall Street Journal, and he made it really clear that it wasn't the relationship managers, it was not the loan portfolio, it wasn't even the source of deposits that caused the problem at Silicon Valley Bank. The problem was caused by 4 people in a room making bad decisions about how to maximize the profitability of the bank at the expense of its safety and soundness. So that was a Wall Street Journal editorial that he wrote. And he wanted to absolve all of the relationship managers of any responsibility for the demise because they were not responsible. It was 4 people trying to maximize the treasury return that caused the difficulty there. It's not too dissimilar at First Republic. So, but we are starting out, one of our advantages is that we have no legacy portfolio. We have no 2% or 3% loans for 20 years. We have no long-term securities. We don't have any of that. So we're going to be starting with a fresh balance sheet. We will be enjoying the Fed funds rate of 5% with all of our excess deposits. So just one more thing about this big mistake that these banks made. I was on the board of a small bank in LA. I still am. It's a very enriching experience. When we were looking to make the same decisions that Silicon Valley Bank was making about whether we go long-term on these securities with this excess cash that we have or not, and we decided not to. We decided it was much better to go overnight with the Fed for 25 basis points. That's 1/4%. And we suffered that low interest rate for a couple of years because we did not want to take the risk of going long-term with money that could be required by our depositors in the short term. So we made the right decision, a bank of about $500 million. They made the wrong decision, a bank 100 times larger. And so that's how I would look to avoid the mistakes of the past that we can learn from. So we will stay much closer to the client. We will manage our short-term demands with our short-term investments. And we won't maximize the return perhaps, but we will be safe and sound going forward.
So
No,
if I could just,
yeah, go ahead.
One last thing, Anand, just to say, we talk a lot about ESG, we talk about all these things. And I hope that what people are saying, and I know you know, because we've talked about this, that we're practicing what we preach here at Alos Bank. And yes. Tom's answer to your very astute technical question is how we're doing that in terms of managing the risk, but also ensuring that we are advancing the full community orientation while doing well as a bank, right, Tom? Mark, Vicky, we want to do well, and we want others to join us and do well. Our investors, our depositors, those who take money from us, loans and so forth. But we're looking for the long term, and that's the big difference.
And one of the things that comes across from your sense of community is also the sense that I feel that each employee within your bank will be treated as if they are valued. One of the frustrations that bankers have had over the years, right, is becoming expendable. I worked at Fleet. It was Fleet was a very different bank than from Citi, where we had a very strong sense of community. If you were a Citi banker, you considered yourself, it didn't matter whether others did, you considered yourself the best banker on the street because you were trained. Because you were trained, you were valued, and your decision-making was valued. You had credit initials, you had the ability to be able to take that one customer who all of a sudden had a mistake and overdrew their accounts, and to be able to actually help that person. or a series of accounts or mistakes where a payroll processor processes on the wrong day. And these are micro issues, but these are the issues that small business cares about. Because now if they have 100 employees and 100 checks have now bounced, they are going to be hit not only with the embarrassment of not paying their employees, but also with so much fees that they probably won't be able to make their payroll. So to be able to bring back a banker that actually knows what they're doing, but also is empowered and is valued within the organization is what I'm getting from what you guys are saying. And correct me if I'm wrong on this. And anybody who wants to expand on this, jump in.
No, we'll go to Tom, but absolutely, people matter to us, Anand, and that includes we don't even think about their staff; they are a part of our family, right, Tom? Over to you.
Okay.
About
the relationship management structure that we are putting in place requires the relationship manager to be well acquainted with their portfolio companies. And that requirement is systemic in that we have meetings on deposits and meetings on loans and in the view of the entire portfolio. So there will be no lapses in knowing who your clients are. And the clients are not necessarily owned by the relationship manager, they're owned by the bank. So there's going to be a lot of intermingling of responsibilities. And in fact, it's one of what I'm told by former First Republic Bank employees, what they miss the most is the lack of collaboration. And formerly, no matter whose client it was, they got the best client service because everybody took ownership for delivering that best client service. And we look at recreating the same thing. I have one more comment I want to make, and that is generally the biggest risk of any startup bank is the ability to scale, the ability to attract new clients or to generate a story that's strong enough to make them want to switch banks. I believe that we have solved that through all of the talent in the marketplace today available to us to recruit people with established portfolios that understand banking, that with deep banking experience. A lot of these people are available to us, and we are talking to, that's my number one job, is recruiting these people with relationships and with deep knowledge of banking that can deliver the services as we envision them delivered universally across the community.
And that comes, to my last question for you folks is that, we've seen some startup banks here and there. There has always been kind of a disjointed effort. Either they're lagging in technology or they're lagging in physical touch or there's a combination of other elements that are not presenting the bank in its best light. And that I would say to you is largely the story with most small and startup banks across the US. Technology, as you guys have pointed out, is a key impact factor. Not only is it beneficial for the clients, it's beneficial for the bank, it reduces costs, it reduces, but it also gives the ability to increase touch. So talk a little bit about your technology vision. You touched on it a little bit, but the technology vision, I think, is what brings together everything. I mean, going back to, why did Citibank become Citibank? Because they had ATM machines, or they had a direct access product, which was the first business banking software that was available for small business, these were the things that John Reed looked at and said, this is how we're going to be the best bank. Even though they didn't have the most amount of branches and they didn't have the most amount of footprint across, but everybody knew what Citibank was, even though they were largely only in New York, Connecticut, California, small markets in general. but it felt like Citibank was this behemoth.
So let me go to Mark and Vicky, and then you end up with you, Tom, and then we'll wrap up on this. But I just want to say, right, Mark, Vicky, for us as board members and investors and co-founders, the high touch, high tech, touch tech, that's all we talk about. That's all we discuss. That's all we work with Tom and team about. The people we pick, the vendors, as Tom has mentioned, everything we do, right? So Mark, first to you on this question from Anand.
Sure. I think it's a great question, Anand, and I love your knowledge of the banking environment. You're really in touch with it, and you know the biggest thing that we've thought about, like Sanjeev has said, is we've focused on touch and tech all the way through. Small business, small banks, they're really, really good at getting to know you and knowing your family and what your business is about, but they can't bring you the technology that you need to do your business at the scale that you want to do it. And we keep that at the forefront, and we want to be that. And it sounds almost simple, but banks have decided we're going to focus heavily on tech, or we're going to focus heavily on relationships, and not that you can do both. And I think we are trying to do that. And I think it's a real gap that we will fill and differentiate us in the market space.
And Vicky, before we go to Tom.
Yeah, no, I absolutely agree. You know, and I find myself a lot of times thinking, I think I've made this comment before on our board meetings, is that this comes back from my experience in the multifamily office space, that also have private equity firms and venture and that are international. The high touch is vital, and it is demanded. And that network and that marketplace has learned to expect it. And then there's other marketplaces that don't even know it exists. Some of these smaller businesses, some different, may put it as minority groups or however, like there's different people and groups that don't even know it exists. And so bringing that touch and bringing that piece of humanity to all groups is vital for us. And I think at the same time, the technology is important because that's our future. I mean, we're not going backwards with that technology piece, and people are wanting to have quick and immediate access. And it's frustrating for people when they can't, you know, if there's something wrong with their wires, or, you know, Steven Chang, our founder, we always kind of joke about it is that, hey, he's moving money all the time and he has all these accounts. He may have like 50 different accounts, and sometimes doesn't know when what account's moving to this account, to that account, money moving across the board, and how important it is to just make sure that as a small business owner, or even if you're in the tech world, wherever you're at, that the bank is going to be covering you as that money is moving. And that you're not going to be pinged and penalized. So I would say that the high touch I think is who we all are. And I think that is absolutely vital, and bringing it from the expectation and the demand to also those that don't even know it exists. And then having that, like you've said, really trying to do a lot of that, the banking for people that want to do it on their phone, because there's generational issues. You know, there's different generations that are doing different things, and to continue to grow and to continue to touch that marketplace that is that younger generation that wants everything on their phone and that doesn't want to come into a brick and mortar. We have to be able to have them be able to open up accounts, be able to apply for a loan, be able to reach out to get customer service, etc. So that's my thoughts, Sanjeev.
So
thank you. I'm gonna go over to Tom.
So there's some irony in the fact that in order to be able to deliver high touch, you need time. And there's a little bit of irony involved here, is that technology is what's going to give us the time to have the luxury to have high touch. So let me give you just two quick examples. In our technology, you open up an account or a number of accounts, you will enter your name and your address and identifying information one time, or we will do it and it'll be one time. I just opened up my fourth 401k with one of the large investment banks 4 times I had to enter in my name, social security, identifying address, 4 different times. How ridiculous that is given today's technology. So getting rid of those friction points give us more time to be high touch. One more example. A small business person once has an accounts receivable line of credit. Those are very common. We'll be doing a good number of those. The current system is they send in their accounts receivable aging, and somebody spends hours doing an analysis of it and getting delivered, and then resulting in a borrowing base. Well, there is technology available to us where we can actually have the entire general ledger accounts receivable borrowing base dumped into a portal, have artificial intelligence spend 20 minutes on it and deliver us a borrowing base certificate in alignment with the business loan agreement that was made at the onset. And that saves us hours. And during those hours, we can have the touch, which gives us the understanding of what exactly is going on today in the business. What can we anticipate for tomorrow? We can anticipate how we might be of service to that company even before they recognize the need. And so it's ironic that it's the technology that will give us the opportunity to have more touch.
Well, with
I
that,
know we have to
gentlemen,
stop. Could I just say 2 last things? I think for us, the last really quick things is that, you know, we all talk about digital transformation, right? That's what it is, right? But what happens is that people put the digital first and forget about the transformation. For us, transformation is the forefront. That's the purpose. It's the service. It's the touch. And the digital is the means. But we keep that very much. The last thing I just say, us as board members, you can tell how actively engaged we are. We're involved in, while giving Tom and the team all the empowerment, the staff, this is something that we are very much on top of. So whether it's managing the upsides and the exponential opportunity or ensuring that we minimize our risk and manage our risk, we are all a team. So thank you so much for this opportunity, Anand. Thank you.
so thank you everybody for hopping on. I think that Alos Bank has a great vision, and I think that sometimes going back to basics is what is absolutely necessary to reset a community, an industry, and an entire world which has made widgets the central point of success instead of relationships. And with that, again, thank you. I couldn't be happier to have you here. And I can say that this vision will definitely spread and apply across California, across the US, and possibly across the world. Thank you so much.
Thank you so much.
Thank you, Anand.
So much, everybody.
Thank you,
everyone.